Welcome back to another video where we will report on the best and worst performing P2P lending platforms in November. We will also cover the latest news, including the recently launched automated high-yielding bond portfolios on Mintos and PeerBerry's plans for 2026. Note that nothing in this video is investment advice. P2P lending remains a high-risk investment and you may lose your money. Alright, here's how the industry has developed over the past month. Note that this data is retrieved directly from the loan statistics on a specific platform. We cannot independently verify the accuracy of the data. Still, it provides insights into the platform's transparency and portfolio quality, which are not the only variables to consider, but among the few crucial ones when investing in P2P loans. As you can see, Mintos is the largest platform in terms of loan assets under management. At the time of recording, the outstanding portfolio decreased by 1.26%, while pending payments increased, resulting in a higher funds in recovery rate. You should note that on Mintos, funds in recovery represent pending payments as well as suspended or defaulted loans. Mintos has also recently launched a new product, the high-yielding bond portfolio, with a quick cash-out option, allowing investors to build a broadly diversified portfolio of bonds that often provides exposure to non-lending businesses across a variety of industries. This portfolio will include bonds already offered on the primary market under the direct structure. This product also offers a cash-out option, allowing you to exit before the bond maturity. This process works the same way as Mintos loans. Investors deposit fresh capital, which is then swapped with that of investors who wish to exit. Mintos claims there will be no fees for this product until the end of the year. Afterward, investors should see some fees, as is the case with almost all Mintos products. PeerBerry is the second largest platform in our list, currently managing over 115 million of investors' funds. As of today, all loans are performing as expected, meaning investors can rely on the promised interest payouts and the overall liquidity of their investments. The biggest disadvantage for many remains limited loan availability, which may change in the future as the platform announced an increase in funding volumes next year, particularly in new markets such as Argentina, Peru, Canada, and Australia. In total, Aventus Group companies are expected to grow by 20% in the first half of 2026, indicating higher funding demand and consequently lower cash drag for investors. To support the funding needs of the new lenders, an SPV called FinWind was created to finance their development. This funding comes at an 8% interest rate and a 1-month loan term. PeerBerry also announced an increase in interest rates for a few selected lenders as shown in the screenshot. Moving on to EstateGuru, which reports a 62% default rate. The company announced that it had recovered the third German loan in September, resulting in a capital loss. When reviewing the absolute amount of defaulted funds, we see no change from September, which renders the expected recovery of 20 to 30 million euro for this year rather unlikely. So let's now review the performance of the remaining platforms. Robocash reduced its outstanding portfolio while also introducing new loans from a recently established lender in the Philippines at a 9% interest rate, which seems relatively low compared to Nectar loans, which are offered at about 11.5 to 12.5%. Both platforms report no funds in recovery. This month, InRental surpassed 46 million in assets under management with 0 defaults. Escaladates' portfolio remained unchanged while funding volumes are at a record low. As of mid-November, investors have funded merely 850k, which is nothing compared to last year, when alone in November Escaladates attracted funds close to 25 million euro in loans. As I record this video, Escaladates management has not addressed any of the concerns the community raised about the deactivation of all liquidity tools. With the low loan volumes, low rates, and ignorance towards the investor community, Escaladates is becoming less and less relevant in the space. That cannot be said about Swapper, Indemo, and Afranga, which report a significant growth in portfolio value over the past month. Both Indemo and Afranga offer attractive cashback bonuses, which are partly responsible for the increase in assets under management. Lintan has also grown its portfolio thanks to its high-yielding development loans. However, growth has slowed as the platform does not seek to refinance its equity tied to the rental properties, which were once the main driver of Fintan's growth. Income reports an increase in portfolio value together with an increase in funds in the buyback-initiated category. Crosspeer grew by nearly 15% from October with a stable default rate of about 3%. Lande also continues to perform well with a higher default rate of about about 8%. There is nothing new with Twino, and Capitale reports a 1.39% increase in funds in recovery. As you can see, some platforms don't publish performance-oriented data, which reduces transparency for investors. At the same time, it's not that hard to figure out which platforms offer reasonable risk-adjusted returns. You can review our country risk and lender risk pages to find the best lenders with the least risk, or navigate to our reviews to check the performance of the entire portfolio in our statistics section, giving you a good picture of the risk management approach on a dedicated platform. So that's it for this month's update. If you have any questions or concerns about a specific platform, write them in the comments below. Almost all platforms are watching our videos and also reading our comments, so you can let them know what you think. If you like this quick update, hit the like button and subscribe. Do not miss out on the next one. Thanks for watching, and I'll catch you in the next video.